Good morning, traders and investors. Happy Friday, everybody, from Puerto Rico. I'm in San Juan right now. I'm in the capital. I'll be here till Monday morning. I'm coming back Monday, so I'm not sure. Actually, I will be able to do a video on Monday because I'm not leaving till midday. But here we are. It's Friday. Welcome back. Folks, if you're enjoying these videos, please like our channel. Go to the YouTube Wealth Press channel. That's where you could find these videos. You could find a Telegram link to subscribe to. And all the info for the links that we discuss here are there. So YouTube Wealth Press channel. And if you post comments there, I personally reply to them every single day within 24 hours. Now, let's get into today's session. We got a lot to talk about, as we always do. And remember, today's a big Algo Corner. So I want to show you some interesting stuff that's been going on. Now, the Dow is up right now. The Nasdaq is up. Everything is up. Why? Well, Apple looked better than expected. They beat their numbers. Now, I told you guys yesterday, 4 of the FANG stocks beat expectations, and Apple is the biggest one, so I expected the same thing from Apple. Now, it didn't close at the high like I wanted it to. Obviously, wanted to confuse traders, Murphy's Law, right? But it is up about 2.7% over $4, almost $4.50. And remember, this has a huge market share on the Nasdaq. So one, you're going to see the Nasdaq strongly influenced by the stock today. 2, don't put all your eggs in one basket and think the market's now going bullish all of a sudden because Apple has earnings. Earnings are actually coming to an end. After this week, you're going to have about 80 to 85% of the S&P reported. So there's not going to be any more shock value in terms of numbers, but you are going to see the small and the mid caps and the regional banks and the tech sector come out. And a few other sectors that I really like to look at, like retail. Retail is usually the end. But today you have AMC Entertainment, and actually movie theaters have been doing better than expected lately. CBOE's coming out today. Fluor's coming out today. Goodyear Tires is coming out today. Johnson Controls coming out today. There's a few, but nothing like it was last week. Cigna, my insurance company, which has been a pain in the ass lately, actually, personally, not as a stock, and Warner Brothers. And again, you're going to see more retail stocks next week. And so far, earnings have been a lot better than expected. We're seeing the opposite of what we saw last quarter. Now, I want to show you something interesting because today is Algo Corner. And I want to show you the kind of things that algos have been doing. I mean, they've been just messing around like there's no tomorrow with all of this market cap. But here, let me show you. It's not loading for some reason. There it is. Here we go. Let me just remove these studies. All these studies make it harder to view everything. And I want to show you algos in full-fledged. Look at this right here. See that right there? That's an algo right there. See how it shakes us out and then comes back up? That right there. Now look at the low right here. That's also an algo. Back in the days, lows were so centric. You could totally see where the lows are, and it was very predictable. Now you have moves like this. See right there? That shakes out the weak hands, causes a bunch of stops, which is one of the reasons we don't use stops anymore. Causes the stops to get pulled out of us, and then it comes right back down. And it happened right here on the bond market, right there. Now let me show you something else. Oops. Now look at the SPY here. Happened right here, right there. Happened right there. Now this is obvious right here. Remember what I told you? It comes up like this, it breaks the level, and then it comes back down. Exactly the same thing happened right here. Look, breaks the level, and then comes back down. Same thing. I mean, it's the same song and dance. And by the way, if you look at the video from earlier this week or late last week, I told you exactly that. I said this was going to be a top, and then it's going to shake us out. And you could see here on the communication sector, similar thing. You could see here on the XLK, not sure if XLK went all the way up there, but yep, right up there. I can draw it for you. So these are algos trying to bid things up. Now, here's the thing about ETFs like the SPY or XLK. They can't really do too much damage. They can't cause a run-up like this. All they could do is cause a little baby blip outside of the range. All they do is they see a bunch of stops there, and they'll break they'll run the market up, they'll whack the stops out, and then they'll take the trade in the other direction. So you got to be really careful when these algos are doing that. Now, looking at each individual sector, which we'll look at right now, Be careful, be careful, be careful, be careful. These algos are wacky. So if you go to my filters, let's just see where the strength is right now. If you go to these filters, you will still see technology and communication services up here. Why? Because they gained so much in the previous months. But it's a big distortion. If you look here, look at what's number one. And by the way, I other than the communication services being here, this looks pretty legit. Consumer staples, healthcare, utilities, real estate, financial, basic materials, industrial. What I would do is I would just take communication services, consumer discretionary, which is already down here, and technology, and I would put them all the way in the lowest place. And utilities and energy are, by the way, following each other right now. Now, looking at them through a momentum filter, I want to show you this is really important. And I'll talk about this today during the VIP room as well. Let me show you this. Come on. This internet is not as fast as I'd like it to be, but that's what happens when you're in a hotel. But what I wanted to show you was, and if it ever flips there, I will be able to show you, but it doesn't look like it wants to. Oops, doesn't want to connect. There it is. There it is. It connects. Yay. If you look here, you will see that communication services is already at the 13th spot. It's not that high right now. And you'll see that utilities and energies, let me show you utilities. They're starting to run up a little bit. But they both look like they've bottomed out. You see that? They're starting to come up. I like utilities right now. I would be going long utilities right now as long as there's some strong stocks out there. Now, energies, if you look at the energy sector, you will see that energies is literally at the bottom. So, again, I'm not sure this is a good time to start moving into energies or wait till they start moving up like utilities, but I believe this is a good time to start getting bargains. But you only want to find really strong relative strength stocks. So for utilities, for example, one stock that I really like, where is my, let's see if it's still up there. Let's see what utility stock is up there. Let's see, Lilly. See if I could find it for you. Right here, Quanta, power. Now look at this stock. This is a utility stock. Utilities are now coming back. The stock is down quite a bit. Look at the trend on this stock. That's the kind of trades you want to be looking at right now. So look at how strong this trend is. So these are the kind of stocks you want. You don't want stocks that are, if momentum levels is hitting the lows, you still want stocks that are trending like that. That gives you the best risk to reward. You don't want stocks that are doing this right here. You don't want stocks that are doing this. You want stocks that are doing this and momentum levels is bottoming out. So this is one of the stocks that I'm looking at that's on my radar big time right now, like big time right now. Now, one of the other things I wanted to talk to you guys about is let me just go to the sectors and I'll kind of go through them with you real quick. Visually, I think it helps visually to go through them. So financials look like they can go a little bit lower. I think they may test the bottom because there's not a lot of catalysts for them at this time. Energy, that's what I was saying about energy. Energy doesn't look like it bottomed out. It could go a little bit lower, again down to here, but I think we're very, very close. Industrial stocks I think are pretty much done going down. Healthcare I think is pretty much done going down. Consumer staples I think is going to start rallying again. Utilities is looking really strong right now, and the fact that it's bottoming out near these swing highs is a very positive sign. I really like utilities right now. Communication services looks like it's got more downside. Technology looks like it's got more downside. Basic material could probably break this low and go a little bit lower. Real estate is looking really solid right now, and consumer discretionary is in the toilet. So I like real estate. I would be very careful with financial stocks right now. I would still be careful with energy. I like utilities. I like industrial and basic materials. I love consumer staples, and I like healthcare. So utilities, consumer staples, healthcare, industrial, and let's see if there's anything else here. Not communication, not technology, basic materials possibly, and real estate. Be careful with energy right now, at least for another couple of days. Let it bottom out and start coming up like utilities is doing right now. Be careful with consumer discretionary and keep your eye on real estate, because I think real estate, consumer staples, industrial, and utilities have in fact bottomed out. And again, keep your eye on those algos. They're attacking the SPY stocks, the sectors, but they can't cause, on a stock, they can cause a run-up of, say, 3 to 5 days. On an index, all they can do is just bump it up and cause the stops. So with indexes, you got to be really, really careful where those levels are, especially during earnings season and levels of high volatility. Stay right now with the most grounded sectors, like defensive sectors like consumer staples, utilities. Be really cautious with technology till earnings are fully behind us and till momentum levels bottom out. They're not there yet. They look like they could go down further. Now, folks, remember, today we have, actually, let me go through with you the main points. I totally forgot to do this. I was getting into all the technicals. So non-farm payroll is going to be the big report. Yesterday, the Dow made a 5-week low. Nasdaq made a 1-week low. A bunch of stocks, including financial stocks, dropped yesterday. Labor Department, the number was 242,000. It's not going lower on the employment numbers. So that's one thing the Fed won't be able to do. Apple is up over 2% pre-market. Sorry, I'm going kind of through them because I just want to go through this with you before I let you guys go. We're looking at non-farm payroll report. They're looking at 180,000. It'll be interesting if the number comes out. It'll be reporting in about 45 minutes. Europe is up a little bit. They got a 0.25 point rate hike, and interest rates are now about 3.25%, which is kind of interesting, still pretty low. China closed lower, weighted down by communication equipment and artificial intelligence. That has a big impact on U.S. stocks. A private survey showed on Friday that the country's service activity grew for a fourth consecutive month as business continued to benefit from reopening. But again, it's really tough right now in China. They've been through COVID twice as much as we have. Keep an eye on Carvana. It had a short squeeze. It's up 34%. Lyft is down 16%. Trupanion is down over 45%. I wanted to short that stock. That was a stock on my short list the other day. And Kellogg's rose 1%. By the way, Kellogg's, General Mills, those stocks are looking really, really good right now. Sorry it took so long, but I wanted to be very thorough today. Now, folks, billions of dollars are flooding in and out of stocks every day. You guys know that. And when just a fraction of that money hits the stock, single stock, oh boy, that injection of capital has the potential to send the stock in exploding higher over the next 24 hours, or imploding. That's one of Wall Street's best kept secrets. Now, Chuck Hughes, good friend of mine, he's planning on pulling back the curtain and revealing how the rest of us can target these stocks that are about to explode. I don't want to miss that. Follow the link below, check out, sign up for this free event. Chuck is a 10-time heavyweight trading champion. He's going to show you how to pick stocks that are about to explode higher before they do, and he's only holding on to them for 24 hours. It's a really great way to avoid all the ebb and flows with the market right now because you're only in for 24 hours. Follow the link below. Check it out right now. Don't delay. Don't procrastinate. I'm watching you. And post comments for me in the YouTube Wealth Press channel. I respond. I want some comments from you guys there. Most importantly, I've got orders for you. Have an amazing weekend, and I'll see you guys on Monday first thing in the morning from wonderful Puerto Rico. Bye.